Gold prices have retraced since yesterday's drop, back up near $20. And here to talk with us about it today is Will Rhind of ETF Securities U.S. Will, thanks for being back with us. It's Wednesday.
Thank you.
So what are traders or longer-term investors supposed to make of days where, and we've seen this a lot, especially since the collapse in mid-April, where you have one day that gold's up $20 and the next day immediately it's down $20?
I think that for people that are looking to trade gold on the short term, that perhaps can be frustrating. However, it's part of the volatility that exists within gold and precious metals. For, I think, the longer term investor, it's really irrelevant because people are less fixated by short term price movements, but are more interested in the longer term sort of secular story for gold.
A lot of people are looking at gold possibly testing some resistance near $1,500. Do you think that is a big number?
I think that it's perhaps less important than people make out. I mean, for example, we just saw some fantastic statistics coming out of Hong Kong with Chinese buying of gold now at a record level for March of this year. So we haven't seen the level of buying that we saw in March before. This is unprecedented. Mm-hmm. And that is a huge support level for the gold market. You've got China being the biggest producer of gold out there, but consuming gold as well at such a rate that I think is a key support for global demand for gold.
Sure. Now, we have China and Germany both a couple of days of some pretty good economic numbers coming out. However, on Tuesday, the Australian central bank came out and said we're going to actually lower our funds rate. What are people supposed to read moving forward on gold? Like, how does this play?
I think for the monetary policy side of things, the interest rate, central banks, governments lowering interest rates, I think in the longer term that is gold positive. And the simple reason being that low interest rate environment, negative real rates in most countries, particularly here in the US and in Europe, that affects the psychological barrier, if you will, to owning gold, paying a carry. So the opportunity cost of owning gold is very low when interest rates or real rates are negative. So I think government lowering interest rates is more often than not gold positive.
And do you think that'll outweigh kind of the positive returns we're seeing on some of the economic data across the world?
So sometimes it depends, which particular economic data you're talking about.
Sure.
The US is clearly still the most important data when it comes to, I think, direction of the gold price. However, obviously the Fed and what they're doing is a key driver at the moment in terms of not just the broader equity market, but also the gold market as well.
Well, Will, as always, thanks so much for being with us.
Thank you.
You heard it from Will. Keep an eye on gold. Some decent economic numbers coming out in Europe, but it's still being offset by don't fight the Fed. I'm Deaux, The Street.